Hi everybody, my name is Gary Yao. I'm a real estate professional, and today I would like to share with you 10 benefits in owning real estate. If you like this information and you find it useful, please share, subscribe, and comment what other topics you would like to learn in real estate. I'm a professional in real estate, so I help my clients buy, sell their properties, and start investing also in this market. So if there's anything I can help you, let me know. So with that, let's get started. 10 tax benefits in real estate. So I started with the first one is depreciation. Owning a property has some wear and tear every year, and you can actually depreciate that for as long as 27 years and a half. That's a good deal because that can help you offset some of your payments when it comes to paying your taxes. Second is rent income. You can also offset some of your taxes in rent income. Let's say, for example, that when you rent it to a family and you use a property management, that fee that the property management charges anywhere from 6 to 10%, that could be depreciated from your taxes as well. Third, but you didn't thought about this, but it's also appreciation. You can actually offset your taxes from the appreciation on your property as long as you don't sell the property. As the appreciation is going to keep going up, you don't have to pay anything until the day that you sell your property and cash out. Yes? And let's talk about the capital gains. Which is number 4. Capital gains. If you own the property for at least 1 year, you'll be paying less capital gains as opposed to if you were to just buy it and flip it within 12 months period. Fifth is living flips. What does that mean? Is that let's say that you buy your first property and you do a house hack, meaning that you rent it out to roommates and you live in that property for at least, I think it's 20 months. 20 months, you actually live for that period of time, then your property, when you sell it, you don't have to pay property gains tax because that was your primary residence and you live in it. So it is not uncommon to see some house hack techniques in which you live for a property and you live for the minimal period of time, and then you sell it without having to pay any gains in it. Yes? 6. Tax-free exchange. Tax-free exchange. See this? Tax-free exchange. So tax-free exchange are the so-called 1031. That means that if you sell your property, your rental property, you don't have to pay any taxes so long that you buy another property of equal or high value. So that allows you some leverage because now let's say that you own a condo or a single family home. You can now, with the extra income, the extra gains that you had, you can buy a fourplex. So you have multiple doors instead of one. Or you can buy an apartment building once you sell, let's say, a fourplex to something higher. So that's the magic of leverages. Next is self-directed IRA. If you have a IRA account, you can actually you can actually use that IRA to buy real estate. And you have to pay taxes, or you don't have to pay what's it called? If you're under 55, you don't have to pay for the penalty for taking that money out. Yes. 8 would be tax-free borrowing. This is a little bit tax-free borrowing. So when you actually borrow money, let's say well, let's say that you borrow to buy a property, which is most homeowners, the mortgage, the interest rate on that mortgage, it will be offset from your income tax, right? So let's say right now your current interest rate is, what's quite low, it's 3%. Well, the 3% of the 3% that you pay on the interest rate could be offset from your income tax. Yes, so that would be a way to leverage it. Yes. 9, installment sale. So let's say that you buy a property directly from the homeowner, and the homeowner that own the property don't want to have the lump sum pay at once because of taxes. Well, you guys come into one agreement that you will be paying the homeowner for a period of time, let's say 5 years. So they buy a property, let's say for 500,000. That means that for 5 years you pay 100,000 per year, then the taxes are going to be less. In fact, it could be almost new because you are not getting the lump sum at once. You are getting it for a period of time. Yes. And last, I know, might be a little morbid, but death. Death could be also a tax benefit. You could actually give it to your heirs in a, yeah, you can actually give it to your heirs, and there will be no tax to your heirs on that. Of course, this last one, well, most of this, you should talk to your accountant first to see what your tax situation. Yeah. So for more information, just let me know if there's anything I can provide for you. My name is Yao, and I will talk to you soon.